Russia's future is bleak, with a potential collapse looming within a decade. 10 years from now, Russia may no longer exist as we know it. That's the latest prediction out from geopolitical expert and strategist Peter Zyyhan. The last 20 years have been full of questionable decisions by various countries. But one recent move stands out as particularly ill-advised, and that is Russia's decision to invade Ukraine. It is a very poor move that reflects the dysfunction of an entire system, which seems to be running on borrowed time, perhaps only a decade at most. And the way things are going, that timeline might speed up due to internal mismanagement. But whether this situation is a cause for concern or relief depends on your perspective. On the positive side, there are some things we don't need to worry about too much. Banking, for instance, has stabilized after Western banks cut ties with Russian financial institutions following the invasion of Ukraine. This created a vacuum that China filled, but Western banks quickly minimized their exposure to Chinese banks, reducing their global portfolio impact to less than 1%. However, there are real concerns that deserve attention. China's strategy of subsidizing manufacturing to keep goods cheap has long-term costs. As other countries rebuild their industrial capacity, manufacturing will become more expensive, and inflation, though decreasing post-COVID, could still linger around 9 to 15% for the decade. In an in-depth analysis, geopolitical expert Peter Zyyhan examines Russia's flawed economic and political decisions and explains how these actions could negatively affect the country and the rest of the world. With that, stick around to the end of the video, where we will analyze Peter's analysis of why Russia might have only 10 years left as a nation. Also guys, only a small percentage of my viewers are subscribed. If you enjoy economics, geopolitics, and history, consider subscribing. It's free and you can always change your mind. Now let's jump in with this analysis with Peter Zyyhan.
It's the dumbest thing I have seen any country do in the last 20 years. And if you think back on the last 2 decades, we haven't exactly been living in a shortage of dumb. But this is happening throughout the entire system. It's seized up, it's non-functional. Demographics tell us that they've got 10 years max. They are perfectly capable of speeding up that time frame due to local incompetence, and it seems that they're putting their back into it. Now, whether this is fantastic or disastrous, of course, depends upon who you are and what you care about. So some things to not worry about, some things to worry about. First, the nots. I don't worry about banking, courtesy of the Russians of all places. When the Russians invaded Ukraine, the first thing that happened was the global financial world, the Western financial world, our banks, cut their connections to Russian banks to zero. Because they were like, sanctions are definitely coming for this. The Chinese flooded into that space. And so Western banks cut their Chinese banking exposure to zero. It's now less than 1% of their total global portfolios. It's taken care of. Second, finished goods. Because of that hyper-financialization model, because they're so protectionist and nationalist with their economic policy, they only import goods that they physically cannot make themselves. Doesn't matter if they make them well, doesn't matter if they're efficient. If they can make them, even if they're double, triple, quadruple the cost, they will do that in order to not import stuff. So their total import bill for all finished goods is only about 4% of GDP. Now that's not nothing, but it is the lowest exposure in the world. And so if Chinese stuff was just, if Western American stuff was to vanish from the Chinese market tomorrow, we'd feel it for a quarter, and then we'd move on. Commodities are different. Pros and cons. Food. The last thing a government does before it dies is impinge food supplies in some way. So all of the agricultural stuff we're sending to China is totally fine until the day it's not. And in that day, no one's going to be worried about selling things to China anyway. So it's going to be, and then hard commodities, fuels, minerals, that's different. We need to rebuild a lot of industrial plant in the rest of the world. And the Chinese are not cost effective in their use of these things. So that's going to be a wild ride from start to finish. The big issue, though, is manufactured goods. This is a fun graphic that the American Enterprise Institute updates every few months. It shows relative inflation rates. The double arrow in the middle, that's total inflation in the United States since the year 2000, roughly 75% increase. Everything below it has gotten cheaper in inflation index terms. Everything above it has gotten more expensive. Oversimplifying here, but as a rule, everything above it is something that requires fingers, eyes, skills, and souls. people, healthcare, for example. These are the sectors where the United States tends to dominate. Everything below it is something you plug into a wall and it beeps and whistles, a manufactured product. The Chinese, because of their subsidy program, have excelled at that for the last 30 years. What they have been doing with that capital build is creating a world where manufacturing goods cost less than the cost of production. That's how they've been so competitive. It has a sunk cost that they will pay soon. But in the meantime, it's made life cheaper for everyone. And if all we do is rebuild that industrial plant someplace that's more normal, it's going to cost more. Those days are behind us now.
While all of these might sound alarming, there's a silver lining. Rebuilding a more resilient industrial base that relies on local resources could lead to significant economic growth in North America. Looking at the bigger picture, inflation has undergone 3 major phases since World War II. The first phase was driven by industrialization and urbanization, as infrastructure like power grids and highways were built, leading to strong industrial demand. The second phase was consumer-driven, as baby boomers came of age and drove up demand for homes and goods. The third phase, which we've experienced over the last 30 years, was marked by low inflation due to cheap Chinese labor and an influx of raw materials from the former Soviet Union. But that era is now over. Chinese labor is shrinking, and Russian resources are becoming unreliable due to war and sanctions. The road ahead may involve higher inflation, but it's not all bad news. The need to rebuild industrial capacity in North America means more local jobs, shorter and more efficient supply chains, and a more resilient economy. This could lead to significant US, Canada, and Mexico economic growth. While the transition won't be easy, the result could be a stronger, more self-sufficient economy. In the global context, the conflict in Ukraine has broader implications, especially for regions like Siberia, with low population density and minimal economic activity. This area is crucial for Russia's agriculture, but it's also one of the least productive agricultural zones in the world. Let's get back to Peter Zyyhan as he further discusses the issue.
All right, so we have to talk a little bit about inflation. Here's inflation in the US and Canada. Similar systems, tightly interlinked. You would expect the data to track, and it does. Let's start with where we are at the end. It's been coming down pretty sharply since COVID. We've got 2 things going on here. Number 1, baby boomers are retiring. I'd say that's a quarter to maybe now getting close to a third of the total picture. That is something that's going to get worse and worse and worse for the next 10, 15 years. But the other 3/4 to 2/3, that's something else. Think back to COVID. Every time something changed, an opening, a closing, a new variant, a new vaccine, hypochondriacs grabbed the policy steering wheel, anti-vaxxers threw a fit, whatever it was. Every time something shifted, we changed how we consume. And every time we changed our minds about what we demanded, it took about 1.5 years for industrial supply chains to catch up and match that shift in demand. Well, it's now been 23 months since Texas, Florida, and Arizona reopened for the last time. Over the next 6 months, every American state plus Alberta followed as well. And then finally, in the aftermath of that, California and the rest of Canada joined in. It's been over 1.5 years. Supply chains have caught up. And so we've seen supply chain costs come steadily down for months. They probably have a few more months to run down. That's the short-term picture. The longer-term picture requires us looking back a little bit. We've had 3 big phases of inflation since World War II. We had that initial burst of industrialization and urbanization when we ran power to the countryside and built our cities and ran interstates everywhere. We had a 15-year period of strong industrial demand-driven inflation. Then the baby boomers came of age and had their kids and built their homes. And we had 2 decades of consumer demand-driven inflation. And of late, we've been living in this weird-ass period. The Chinese entered the party with 1 billion industrial workers who worked for less than market costs, pushing down the cost of manufactured goods. And the Soviet system dissolved, dumping an empire of raw materials onto global markets, keeping commodity prices under control. We had 30 years of disinflation. For most of us, that is the sum total of our entire business experience, and it is the most abnormal period in human history. And it's over. The Chinese labor is literally dying out, and the Russian stuff, either due to lack of maintenance or war or sanctions, is going to go away. But the inflationary trends are back as well. The boomers may be retiring, but their kids, the millennials, large generation, peak of their consuming years, that has another several years to run. And if we still want stuff in a post-German, post-Chinese world, we're gonna have to build it ourselves. We need to double the size of the industrial plant on this continent as soon as possible. That means these four things together, 9 to 15% inflation for the remainder of the decade. Now, before you have a stroke and call your broker, deep breath, double the size of the industrial plant. That means local workers using local resources, serving local consumers with supply chains that are shorter, cheaper, cleaner, easier to operate, fewer steps. That's not a good story. That's the story of the greatest economic growth in the history of Mexico and Canada and the United States. And when we're done building this system, we'll have a network that is largely immune to international shocks to boot. This is a great story. We just have to put our back into it a little bit. This is a map of the Russian space. It is on its side, so feel free to tilt. On the right, we have a population density map. And if you look at that lighter color of orange going from Central Europe down into central Siberia, that lighter color of orange is roughly the population density of Nebraska if you remove Lincoln and Omaha. People do live there, but only just. The map on the left is a combined climate and economic map. Now, the green zone that roughly overlays populated Russia, that's the wheat belt. That's the part of Russia that is worth having, but you only get one crop of low-quality wheat a year. And so it's the lowest capital density of any agricultural zone in the world.
So now, let's break down why Russia might be in serious trouble within 10 years. Aside from the issues Peter mentioned in this video, one of Russia's most pressing problems is its declining population. The country has a low birth rate and high death rate, leading to an aging population. This demographic shift means fewer young people are entering the workforce, and the burden on social services is increasing. With a shrinking and aging population, Russia could face severe economic and social issues. Russia's economy heavily relies on oil and gas exports. However, the global market for these resources is shifting. Countries are increasingly focusing on renewable energy sources, which could reduce demand for Russian oil and gas. Additionally, economic sanctions imposed by Western countries due to political conflicts have isolated Russia from much of the global financial system. This isolation has hurt Russia's ability to engage in international trade and investment. The Russian government has also been criticized for its inefficiency and corruption. These issues can lead to poor resource management and hinder economic growth. Corruption can also deter foreign investment, which is crucial for economic development. When governance is weak, effectively addressing other systemic problems becomes challenging. The country needs to address these issues promptly to avoid potential collapse. If current trends continue, Russia may face significant economic and social struggles in the coming years. What do you think of these developments? Share your thoughts in the comments below. Thanks for watching, and subscribe for more updates and analysis as we track this critical story.